the pound, really?
Morning.
Morning.
Well, we don't share the view that it's a currency to buy aggressively at this point. We have it being relatively flat against the dollar over the course of the next year. Of course, it did have quite a sharp depreciation after the Brexit vote, and it's been very sensitive to the ups and downs, the ebbs and flows of the discussions around the negotiations. And we think it will still be pretty sensitive to the political developments we see over the coming months.
But at the same time, you think that there is an opportunity to invest in the FTSE, in the
Yes.
the stocks over there. And why is that?
Well, firstly, I should say that we're bullish of equities in general, globally. We think that global growth is going to be around 4% again next year. Very synchronized growth, and that benefits equities in general. You have to bear in mind that the FTSE 100 is one of the most global indexes that there is. About 80% of the revenues of companies in the FTSE 100 come from outside of the UK. So to the extent that the UK economy weakens, which we expect, that doesn't really have a big effect on those companies. They benefit a lot from sterling weakness.
But it's important to sort of decide when you're investing, if you're a foreign investor in the FTSE, you have to have a view on the pound or else you have to hedge out. So how are you advising clients?
We have been recommending that dollar investors hedge into their sterling exposure, but that the FTSE 100 would do well in local currency terms, which has been the case. But it's also interesting that other indices in the UK, the FTSE 250, which is the next layer down of companies, which is about 50% exposed to the UK market, has also done reasonably well, partly because it's got a lot of fast-growing companies in it, more technology exposure than many other indices, and lots of faster-growing, smaller companies.
So the FTSE is, the UK is one half of the Brexit trade. The other is Europe itself. So let's turn for a moment to Europe. We're putting a chart up now to show how the Stock 600 has done against the S&P 500 and the MSCI Asia Pacific. And you can see the white line at the bottom of the Stock 600. What accounts for this, and is this going to turn around?
Well, I think that there are a couple of things that account for this underperformance in local currency terms of these markets. One of them is that the euro has been very strong this year. Obviously, if you look at this in common currency terms, you've shown it in local currency terms, Europe will have done well.
Very important point. It'll be a very different line.
Absolutely. But also a very important other factor is that one of the most key drivers of equity markets over the last year has been the technology sector. Now, technology accounts for about a quarter of the S&P.
Yeah.
It actually accounts for about 27% of the Asian ex-Japan index. It accounts for about 5% of the European indices. So it's underweight of one of these key industries that have really driven the bull market.